Hello, ladies and gentlemen, Greg Malkolowski from ForexLive.com. This is the Kickstart video. On the Kickstart video, I take a look at three of the major currency pairs: Euro versus US dollar, dollar versus yen, and sterling versus US dollar from a technical perspective. Today's date is Aug.12, 2024. Let's get started. We're off to a sleepy start in the foreign exchange market, little in the way of ups and downs. The dollar is a little changed with a mixed picture against the major currency pairs. We do have a limited economic calendar today. We do have CPI and PPI coming out later in the week. The Reserve Bank of New Zealand will announce their interest rate decision also this week, with a coin flip expected in that country. So with that said, let's take a look at the euro versus US dollar to start our Kickstart video. We'll take a look at the hourly chart and in trading that we saw on Friday. We saw up and down price action, up, down, closed more near the low, more a little unchanged actually for the day. I think for the week the price was mostly to the downside. However, what we did see is that the price was staying below the 100-hour moving average. And in trading here today, the Asian session rates tried to stay below that level as well. And the low price from trading here today stayed above the low price that we saw on Friday's trade as well, with keeping the balance in play. But then we started to see a break above the 100-hour moving average. So the buyers had their shot to take the price higher. And as you can see, we're moving back below that 100-hour moving average right currently at the moment, with the price at 109.179. Also near the 100-hour moving average is the 38.2% retracement. That's of this move, most recent trend move to the upside here from the low price around August 1st to the high price that we saw in August. So the range for August, both the 100 and 100-hour moving average, 38.2% retracement is the same level. So guess what? If we're going to stay below the 100-hour moving average, we need to get below this low price from Friday's trade and the low price from the Asian session. Then we'll look toward the 200-hour moving average and the 50% retracement level, the same move to the upside. That level those levels coming near the 108.92 level. Get below that area, that opens the door for further downside. Conversely, if we trade back above the 100 and start to move higher, making new highs for the day, getting above the high prices from Friday, we'll look toward this swing area up here between the 1.0941 and 1.0947 level. That level corresponds with the number of different swing highs, swing highs and swing lows, I should say. Going back to here, we traded near the high of that swing area, I guess, on Thursday's trade, and fell off. And so getting above the 109.41 to 47 level would open the door for further upside momentum in the euro versus US dollar. Those are close levels to watch for as the market tries to figure out which way it wants to go. Let's take a look at the dollar versus yen next. What we see in the dollar versus yen is a break above the 200-hour moving average. That's a green line on the chart. The last time the price tested the 200-hour moving average, we found willing sellers and trended to the downside here in fast, furious motion, and led by the sharp move on Monday's trade of last week after the Nikkei fell minus 12.4%. We had already started to move pretty fast to the downside through this level as well. So it was an exhaustion selling here all the way down to 141.67. By the way, in the month of July, we had reached a high of 161. So that's about 20 big figures in the over the course of 1 month to the downside, and we started to correct that back to the upside. As you can see, the last 4 or so trading days have seen up and down price action. We did try to start to hold support against the 100-hour moving average here and the 100-hour moving average base here, and started to move back to the upside. 200-hour moving average is still going to the downside, but as I mentioned, we just broke above the 200-hour moving average for the first time since this day right here. That increases a bullish bias, but we are still short of this high price from last week's trading at 147.88. That's going to be our next target to get to and through. If we're able to get above that level, that would open the door for a run toward the 38.2% retracement. As most people know, on a trend-like move like we saw from July to August, it's important to get above the 38.2% retracement to show that the buyers really mean business. If they can't get above the 38.2% retracement, are they really winning from this move to the downside? The answer is no. So, there's a progression. The progression is get above the 88 level here first, and then we'll start to look toward the 38.2% retracement at 149.41. We'll also probably have the 148 level as a natural resistance level for the dollar versus yen, so be aware of that level as well. Let's finally take a look at the sterling versus US dollar. I'm going to focus on the 4-hour chart here, and we have a swing area coming in between 127.53 and 127.77. That level corresponds with the number of different swing lows and swing highs over here, where the price was moving above and below that area. Got a little messy, admittedly, in trading over the last few weeks around that level. But we in trading here today, we're seeing the price try to break a little bit above the high of that swing area and a little bit below the low of that swing area, but with no momentum so far. Also within that swing area is a 38.2% retracement. That number that I like to see the price stay below. Admittedly, the price did move below that 38.2 on its way to the 50% retracement in trading last week, and we actually broke below that 50%. But as outlined in previous videos, there was a cluster of moving averages in the 50% retracement down here, including the 200-day, 100-day, 50% retracement. So the price moved below the 100 and the 50%, but couldn't get below the 200. That was needed to get this price moving lower. So the inability to get below that level gave the buyers a go ahead to push back to the upside, back into this swing area. On the top side, if we do move higher from here, we have another cluster of moving averages. This defined by the 100 and 200 bar moving averages on the 4-hour chart. Those are this blue and green lines. Those levels come in at 128.19 and 128.21. We're going to need to get above that area to increase the bullish bias. So, if we were to characterize this, on the wide, this is the range for the sterling versus US dollar, with on the downside, the 200-day moving average being the outer extreme at 126.60. On the top side, we have the 100 bar moving average on the 4-hour chart at 128.21. So there you have it, a Kickstart video taking a look at 3 of the major currency pairs to start your trading week. My name is Greg Michalowski. Good fortune with your trading. Bye-bye.